Hello guys, and welcome back to the channel. So I just got off the Tesla earnings call, and I'm very happy with Tesla earnings for many reasons. It's exactly what I thought that it would be, and the stock price is falling after the earnings, and I'm so happy about that. And actually some of the things that was made in this earnings call were even more bullish for the future. It's very bearish for the near term. There might be more price cuts coming. It's quite late here when I'm recording, so if I slur my words, I'm sorry. In the last earnings call, they said that the auto gross margin would hover around 20%, and then when Zach Kernkorn, the CFO, was asked about this, he said that yeah, but that was before we lowered the prices, and obviously that pulls down the floor much more. And then when people asked Musk about how low will the prices go, then he was kind of like, yeah, we can, if we want to, we can sell cars with a zero profit. So this is very bearish for the near term. So basically they just said, like, we don't give an F about the margins in the next few quarters. Don't look at these next few margins. All we care about is pumping out cars. So this was the super short version of the Tesla earnings call. Now I'm going to give you a bit more detailed version. If you want to, and you want to stick around for that, please make sure you hit the subscribe button and give me a like, and let's go. So I highlighted the important parts of the call. Profitability was 11.4%. The current macroeconomic environment we see this year as a unique opportunity for Tesla, as many car makers are working through challenges with the unit economics of their EV programs. We aim to leverage our position as a cost leader. We are focused on rapidly growing production, investments in autonomy and vehicle software, and remaining on track with our growth investment. Our near-term pricing strategy considers a long-term view per vehicle profitability given the potential lifetime value of a Tesla vehicle through autonomy, supercharging, connectivity, and service. So here again they reiterate that they don't give an F about how cheap they're selling the cars, because they can make this money back later with, you know, autonomy, supercharging, connectivity, and other services. And this is a unique advantage. They said this many times on the earnings call. This is only Tesla who has this. We expect that our product pricing will continue to evolve upwards or downwards depending on a number of factors. So even they're saying we don't know if the price is going to go up or down. But in the earnings call, they were sort of sounding like it was going to go down. Although we implemented price reductions on many vehicle models across regions in the first quarter, our operating margins reduced at a manageable rate. And this is true. I will show it to you in the numbers. We expect ongoing cost reductions of our vehicles, including improved production efficiency at our newest factories and lower logistics costs, and remain focused on operating leverage as we scale. So this is nice as a shareholder. And here is the main numbers that you need to look at. So revenue decreased from Q4 21 billion to 19 billion. So that's not nice, but it's still up 18% year over year. The energy storage revenue was a very nice increase. However, I do have a question mark here, which you will see later, because something is fishy and I want to do more research if it's some accounting rules. So I will get into this, but so you can see it went from 616 million to 1.5 billion, and this is a 148% increase. Here is the gap. Gross margin 19.3%, and this is 10 basis points down compared to Q1 2022. However, majority of the price cuts came from Q4 to Q1, and here you can see it's only like 400 basis points. So I think that the price cuts were like 15%. So what is that? 1,500 basis points, and the gap gross margin is only down 400 basis points. So that is very bullish for me. So that means that they are being able to reduce costs almost the same as they're reducing prices. So yeah, then the net income is down year over year. So this is very bad for the near-term stock price. Very good for you and me who are long-term Tesla investors and want to build out a sizable position. Then we go So here is the very interesting thing. You can see that the storage deployment went from 846 megawatt hours to 3,889, which is a 360% increase. And yet, as I showed you before, the revenue only increased 140%. So we are missing a 200% something, like something is 200% off. So either they decrease the price to more than half, which I didn't hear. I only heard that the storage prices were going up, or there is some accounting himbo jimbo that they're not able to recognize revenue for whatever reason, and they're actually missing billions. This would be like $2 billion missing from the revenue, which would make this quarter a highest ever revenue quarter. So this is definitely a question mark for me, and very, very bullish for Tesla Energy. And then I just marked this as interesting that the supercharger stations are 33% up year over year and growing, and the supercharger connectors 45,000 growing year over year. You can see that Tesla's market share is growing. Then here I marked something that is important. Our growing fleet of FSD beta users has an exponential impact on total FSD beta miles driven. With over 150 million miles to date and counting, this level of data collection is unprecedented in the industry. Mass collection of diverse data sets is essential for AI-based approach, the only approach we believe can work for scalable autonomy. In Q1, we enabled the latest FSD beta software stack for highway driving. So this is kind of like my second, or my favorite stocks are Tesla and Palantir, and we talk so much about that the model of the AI is actually very simple. It's more the data that gets fed into it that is the gold. So here Tesla is clearly referencing this, that they have super advantage and no other car company has this in the industry, that they can leverage so much data. Here is something very important. Battery powertrain manufacturing. Producing electric vehicles profitably is a challenging endeavor, right? Lucid and Nikola and all the others. It requires rethinking how vehicles are designed and produced from the ground up. Our cost journey is nowhere near finished, which is why we recently announced a transition to 48-volt architecture for vehicle electronics, starting with Cybertruck, higher penetration of in-house design controllers, cheaper, more scalable drive units, and further innovations in the manufacturing process. Cost reduction remains the main enabler of delivering on our mission. This is very important for me because, you know, people tend to think that, I don't know if people tend to think, but you might tend to think that because this new next-gen model is going to be 50% cheaper, all the attention is going to that, and no more cost reductions are coming from the 3 and the Y. And this is what they're saying, that their cost journey is just in the beginning, and they have so much more levers to pull, meaning they can decrease the prices a lot more without completely destroying the margins. And here they are showing how the global Model 3 cost went from 2018 to 2022. This is the energy deployments, which is starting to be a nice addition to Tesla's business. Supercharging, while still a relatively small part of the business, continue to grow as we gradually open up more network to non-Tesla vehicles. And this is the services other gross margin, and you could see that Tesla was losing money on the superchargers and services and on all other things, and then they are now consistently having a positive gross profit. And I was highlighting these because these are non-auto revenues, which don't get affected by Tesla cutting prices, and this is actually good for Tesla to have more and more cars in service on superchargers. So this offsets the loss that we see on the prices, but only in the future. So very important. So while we continue to execute on innovations to reduce the cost of manufacturing and operations, over time we expect our hardware-related profits to be accompanied with an acceleration of software-related profits. Very important. We continue to believe that our operating margin will remain among the highest in the industry. This is the other thing. So Tesla's gross margins are, like, even though they were technically a miss and they are down from the high of 29% to 19%. This is still way higher than any other normal car industry. And if you look at EV competitors, it's like they're like the only ones who even have a positive gross margin. I think Ford loses like 40% on their Mach-E in gross profit, and then they have all the additional costs in it, so it's crazy. And what we are all waiting for, Cybertruck remains on track to begin production later this year at Gigafactory in Texas. In addition, we continue to make progress on our next generation platform. So then they basically said that they developed their own Tesla operating system, and this gives them so much flexibility and it eliminates expensive third-party software and cloud subscription fees, so they're not subscribing to Palantir anytime soon. That's what I got out of this, and here you can see nice pictures of the Cybertruck line getting ready. Here is some not so bullish charts. You can see the operating cash flow, how it's not looking good right now. This is the net income and adjusted income, very nice uptrend, and then it's sort of going sideways. However, these are the charts that they're showing to still reassure you that compared to the auto industry, they still have much higher revenue growth, even though it was not what we are used to as Tesla shareholders. And it's much higher than the S&P 500, and same on the operating margin, that they're like in line, I guess, with the S&P 500 now, but way higher than the automotive industry. This is the P&L, the statement of operations. What did I mark here? Exactly, the generation and storage, as I said, like it's missing. You can see that the income went from 616 million to 1,500 million, even though the deployment went to 3,000 something. So this should be almost like 3 point something billion. And that is a big question mark for me. Then I marked here that the expenses were actually going down. So that's very nice in an inflationary environment. So Tesla has a very nice cost control. Then on the balance sheet, you can see that their inventory blew up by 7 billion. So that's cash that they're missing. However, their cash was still growing, and currently they have 22.4 billion on the balance sheet. And it sounds like a lot of money, but you can see that just their accounts payable is 15.9 billion. So it's not as much money as it sounds like. And this was all from the Tesla presentation deck. And now I made some notes about the earnings call that I will share with you if you're still with me. I will try to keep it short. So Elon opened the earnings call and he said that the Model Y was the best of any car in the EU in terms of sales, and in the US the Model Y became the best non-pickup selling auto model of any kind. He said that he's not telling anybody anything new, with that the macro is completely uncertain. And he expects the Cybertruck delivery to begin in Q3, and that the team is super focused on autonomy and Dojo, and he thinks that Dojo can be made 10 times more efficient in training AI in terms of costs, and Dojo might be a service that can be sold for other companies just like AWS was. No clue what this means, no clue how to put this into any model, but it's like a nice call option that might happen in the future. Then Zach Kirkhorn, the CFO, took over, and he said that the auto GM gross margin was reduced, but everything is healthy in the company. They have a healthy gross margin and healthy profit, especially if you compare them to other auto companies. Even with these reductions, you have to remember it's still like double as much as the other companies. Keep in mind, this is when the bears can say that, yeah, but the valuations are like 10x the other auto companies. So, okay, that's a fair point at this point, when they're saying this. like, yeah, our gross margins are going down, but don't worry, it's still the highest in the industry. But yeah, your valuation is also. Then what was surprising is he said Austin and Berlin are still margin headwinds. So there's room for improvement there. And that the storage business is growing very nicely, but it's not where they want it to be in terms of profit percentage. However, they had the highest gross profit that they have ever had on energy storage. And they said that this year's philosophy is to grow volume no matter what, while trying to keep the company healthy, but it is to grow volume. Then we come to the questions, and funny enough, there was the retail investor questions and then the analyst questions, and there was some analysts that asked good questions, but generally the retail people asked way better questions, like this one. Somebody asked if they could tell how the price cuts happens, what is the logic, what goes into it. And then they didn't really want to disclose how they do the pricing, but Kirkhorn said that they meet weekly and they assess global data. Then somebody asked Musk if he still thinks that the energy business is going to be bigger than the auto business. And Musk said that this was actually misleading because revenue-wise, the auto business is always going to be bigger, but gigawatt hour-wise, the storage might be bigger. And at first, I was surprised by this answer, but then, of course, because the car is not only a battery, the battery is just a small cost in the car, and you're also selling, you know, the steel frame, the windows, the radio, and you know, everything that is going into the car. And this is why, in terms of gigawatt hours, the energy storage is going to be way bigger, but not necessarily in terms of revenue. So then somebody asked how they think that the margins are going to be for the batteries. And Zach Kirkhorn said that later, he didn't say when, they're going to break out exactly what are the gross margin. And he said that when they have new products, they're always shooting for a 20%, like mid-20s gross margin. And he said that the energy business is not there. Then somebody asked about the 4680 cells, and the ramp is going very good. Then somebody asked, like, what is the key focus on keeping your costs in line? And Zach Kirkhorn actually answered that the key focus of their cost restructuring or making the cost better is fully ramping up the Austin and Berlin factories. And then somebody asked Musk, like, if he could tell the people what they see when they cut prices, because there was a lot of people who are saying that, yeah, the initial price cuts, they made a huge boost in demand, but they have not been working recently. And Musk just said that all they see is that the orders are coming in faster than the production rate. And by the way, I think that this was a big clue, and I think that this is what they see. They track real-time data, and they want to keep the order flow higher than the production rate. And I think that when they see that for many days the order flows are way lower than the production rate, then they decrease prices, because they want to keep they want to keep the ship going, right? Then the analysts started taking questions. Somebody asked, there was a lot of boring and stupid questions, so I'm not going to read them. Somebody asked, what is the FSD take rate? This would have been a very good question if Musk would have answered it, but he didn't. He said that there will be more data released on this in the year. Then somebody asked, like, what's happening with the EV material prices, because they have been declining, and this should be showing up on Tesla's gross margins. And they actually gave some very good data, because they said that in the quantities that they're buying, they're not so affected by the spot price of these materials. And so they locked in very low prices of these materials, so it doesn't do a lot for them. And then Musk actually says that he is anticipating bad economy for the next year to come, but if you could give him your crystal ball, he would happily loan it, because he cannot see the future. and he reiterated this many times, but he thinks that from next spring the economy is going to be good. Then some analysts asked, how do they monetize a car? Because they mentioned that they can sell cars with zero profit, and because they can recoup the lost profit later, and they're the only company that can do this. And Musk basically said that robotaxi is one way. He didn't fully answer the question, and he said that it's kind of misleading because they internally call the next gen car the robotaxi, but actually every car that has hardware 3 or higher is capable of being a robotic taxi, even though it's not the next gen robotaxi. Then they asked him, what do you see on the gross margins? And this is what I mentioned before, that Zach said that, yeah, we guided for this 20%, but that was before the price cuts, and then we cut prices. So now we're obviously not guiding for 20% anymore. And even Musk came in, I think, at this point and said that, yeah, like they could, if they wanted to, they could sell the cars at a zero profit, and then they can make up this loss. So, and then they asked Musk if he is still reiterating the 2 million units. And again, he said, if you have a crystal ball, please give it to him because he would like to use it. And he said that if there is no huge macro shocks and no geopolitical shocks, then could be 2 million, but they feel comfortable with the 1.8 million guidance. Then somebody asked, like, what do they see on the supercharger network now that they're opening it up to the public, because there was this fear that there is just going to be too many people using the Tesla superchargers, and this is going to ruin experience for the other Tesla users. And they said that 50% of all superchargers in Europe are open for everyone, and this they managed to do somehow without increasing the wait time. So that's fantastic, and they want to do the same in other parts and in the US. Then they were really pressed again about the gross margins, and basically Musk was again saying that if the Fed increase rates, that is basically like the car prices are going up, because people, the way they buy cars is by paying the monthly payment, and that determines what kind of car they can afford. And he again reiterated, and he said, I don't think many people will understand this, that they can sell zero margin on a car, and they are the only company that can make this up later. And then they asked them if they're trying to destroy competition, and he actually said, no, we're actually helping competition. We outsourced our patterns, and they don't think about competition. They're trying to take their, like, you know, have their own ship going, and they don't discuss competition when they cut prices. And then the last good analyst question that came was that somebody asked, like, they see that they're always producing at max capacity, and they asked, like, do they see any change in this, meaning that if the macro really turns bad, that they will limit the increase of production and close down factories so that they don't completely kill the profitability of the company. And again, Musk asked for the crystal ball that the analysts seem to have. And he said that if there is not a macro shock where people completely stop buying cars, then they will focus on just pushing out the volumes. And this was the last question by analysts, and Zach really asked people to not judge Tesla based on the next few quarters, and they are really focused on the future and what's going to happen in 2024, 2025, and they feel that the best way to make the company successful in those years is to do these price cuts and do the strategies that they're doing. This to me means that they're super confident about them reaching autonomy. And this is super bullish, and the fact that people are freaking out and they're selling the stock because the gross margins are 1% less than they expected, and this is hell, is super good. I think it's super good for the smart retail investor, super good if you want to build out the position. But the next 1 year, I don't know what's going to happen to the stock. I wouldn't be surprised if the stock would trend down, maybe go down to 150. But if a lot of people understand the potential in this, then obviously this is not going to happen. But so far, I love everything in the earnings. I completely understand the strategy. I do think it's the correct strategy, and more price cuts are probably coming, and more freak out is coming. It's going to be exciting. Thank you so much for watching this video. Let me know in the comments what you thought, and I'll see you tomorrow in the next one. Ciao, ciao.